In this video, I will be sharing the best ways of using moving averages for the purpose of trading. But before we start, be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new videos. With that being said, let's get into today's video. First up, let us understand, what is a moving average? A moving average is a simple line that shows the average price of an asset over a particular period of time. This means that a 20-period moving average will show us the average price of the last 20 candles. But, how can a moving average help us in trading? How do we interpret the moving average? Well, a moving average is basically used to identify the trend of the market and simplify the price action of the asset. So, if the price is trading above the moving average and the moving average is sloped upwards, we can consider the price to be in an uptrend. Inversely, if the price is trading below the moving average and the moving average is sloped downwards, we regard this as a downtrend. A flat moving average with the price moving around it is regarded as a sideways market. Different moving averages will show different trends of the market. For instance, a 200-period moving average will show us the long-term trend of the market. A 50-period moving average will show us the medium-term trend of the market. And a 20-period moving average will show us the short-term trend of the market. Now, a lot of traders like to use two or more moving averages to identify the trend of different terms. For instance, here on this chart we have three moving averages: the 20, 50, and a 200-period moving average. Here we see that the 20 and 50 EMA are sloped upwards and the price is above them. Hence we can say that the price is in a short-term uptrend. But the price is below the 200-period EMA, and the 200 EMA is sloped downwards. Hence, we can say that the long-term trend is downwards. So the price is in a short-term uptrend and a long-term downtrend. A lot of traders also use moving average crossovers for trade signals. For instance, if we use a 20 and 50 EMA example, a sell signal is generated when the 20 EMA crosses below the 50 EMA. On the other hand, a buy signal is generated when the 20 EMA crosses above the 50 EMA. The crossovers can sometimes provide good trading signals in a trending market. But in ranging markets, crossovers can give us a lot of false signals. Another major characteristic of the moving average is that it acts as a dynamic area of support and resistance. This means that whenever the price is in an uptrend, the price will often find support at the moving average. Similarly, in a downtrend, the price will often find resistance at the moving average. We will use this particular characteristic and create strategies around this concept. We will only use the 200-period exponential moving average for all of these strategies. And the timeframe will be 15-minute timeframe. So, the first strategy is by using a moving average with an oscillator. An oscillator is a type of indicator that moves from top to bottom and vice versa. You can think of an oscillator as a pendulum. It has a fixed range and the value of the oscillator will stay in between that range. RSI, MACD and stochastics are some of the most popular oscillators. For our strategy, we will use the MACD indicator. MACD consists of three elements: the histogram, the MACD line, and the signal line. In this strategy we want to look for a major trend. Then we will look for a pullback and try to enter when the pullback is over and the price resumes the uptrend. Let's look at a chart to understand the rules. Here on this chart, we see that the price is trading above the 200 EMA and the EMA is also sloped upwards. Hence, we can say that the price is in an uptrend. Now, in an uptrend we will be looking for a buying entry only. So we want to wait for a pullback. Here we see a strong pullback as the price moves towards the 200 EMA. Now, we will enter a buying position when the MACD gives a bullish crossover. A bullish crossover occurs when the MACD line crosses above the signal line. The most important point here is that the bullish crossover should occur below the zero line. If the crossover occurs above the zero line, then we will not buy. But since the crossover occurred below the zero line, we will buy here. We want to make sure that the price does not break the 200 EMA while making a pullback. If the price breaks below the 200 EMA, we will not consider that trade. We want the 200 EMA to remain intact. As you can see, after our entry the price gave us a strong up move. Now, let's look at a sell trade. Here we can see that the price was constantly trading below the 200 EMA. Hence, the price was in a downtrend, and we will look for selling opportunities only. A selling opportunity will occur when the MACD gives a bearish crossover. A bearish crossover will occur when the MACD line crosses below the signal line. This crossover should occur above the zero line. In our example, the sell signal occurs here. Hence we sell on the close of this candle. And as you can see, the price gave a strong down move after our entry. Another trading strategy for the moving average is by combining it with trend line. So on this chart we can clearly see that the price is trading above the 200 EMA. So we will look for buying setups only. Here is a strong pullback in price, and the price touches the 200 EMA. At this point we know that the 200 EMA provides support to the price, and the price may bounce off this EMA. So we want to buy here. But when do we buy? For that, we will create a short-term trend line on the pullback. Now, we will wait for the price to break out of this trend line. The breakout happens here. So we buy here. And as you can see, the price made a strong up move after our entry. Here is a sell trade. We see that the price was trading below the 200 EMA. Hence, we will look for selling opportunities only. Here the price makes a pullback and touches the 200 EMA. The 200 EMA can provide resistance to the price, and the price might make a down move. So, we would like to place a short trade here. So we will create a short-term trend line on the pullback. The price breaks the trend line on this candle. Hence we will sell here. And as you can see, the price made a strong down move after our entry. That brings us to the end of this video. Here, I have given you 2 strategies that can help you generate consistent profits. If you like this video, then be sure to subscribe to our channel so that you don't miss on any of our new videos. See you soon.